Good evening, all of you. So today we are conducting Management Accounting and Finance subject revision. So based on the low performance areas of July 2024 examination, we have organized this seminar series and we hope that this will be very beneficial for all of you for your AAT examinations. So today we have a well-reputed lecturer for conducting this subject, Management Accounting and Finance. So it's my honor to invite Mr. Hashan Baduge to conduct today's program. Over to you, sir.
Right, students. So I hope you can see me and hear me, right? So let me know whether I am visible and audible. Can you send a message? So not to the chat box. So you have Q&A. So you can send a message, right? Can I get some responses? Yes, sir, audible. Thank you, Shifa. Asik, thank you. Yes, dear sir. Okay. Others, I hope, right? So you can see me as okay. So students, and thank you very much. First of all, AAT Sri Lanka. Thank you. Renushi, thank you. So thank you very much, AAT Sri Lanka, for inviting me to conduct this session. So this is a pre-session for every student in Sri Lanka who will be doing management, accounting, and finance in 2025 January exam, which will be happening in February. So we think 10 days from today, right? So the objective is to, as they inform, uh, to teach you, update you, basically revise your knowledge on the low performing areas of the low pass rate subjects. So you know what are the low pass rate subjects? That's management accounting basically and auditing, right? So these are the two subjects in final level you are having kind of a low pass rate. So in management accounting also they have identified a lesson which is having a low pass rate. So this is why they invited me to conduct this session. So basically what we are discussing today, students, that is capital investment appraisals, right? Capital investment appraisals. Basically you can say as investment appraisal, or else you can say as long-term decision. Doesn't matter. So just telling about me. So my name is Hashan Vaduge. I'm also a AAT member, actually a fellow member. I was like you. I also completed AAT, and after AAT I did chartered. So I'm a chartered accountant, and also I'm an ACCA member, UK, right? I'm ICAW member, Institute of Chartered Accountants in England and Wales. I'm a fellow member in CMA, and also I'm a graduate from the accounting department of University of Sri Jayawardhanapura. So I hope I'm having qualifications to teach you, but that's not the important one. I hope you will understand what I'm teaching. So students, to teach you this lesson, I have selected a paper, which is the most recent paper of AAT final level MAF. So I want everyone to get the paper from the AAT Institute website, 2024 July paper. So what you can say, what you can search as AAT past papers. Just in Google, or if you are joining from iPhone or whatever, Safari, AAT past papers. AAT past papers. So there get the 2025 July paper, and here we will be discussing the investment appraisal question, which is question number 9. Question number 9, right? So basically why this question is important, students, why this lesson is important, you will have a definite question from this lesson. So now since AAT Institute asked me to do this lesson, which means definitely you will also be having a question from this lesson. So it was there for like 2020, whatever the syllabus first paper, you had this, and you will have the last paper of this syllabus next batch. I hope you will not sit for that paper, because you will definitely get through in this paper. So we will be discussing this, and even students, now this is AAT final, no? But let's say after AAT, if you are going to do chartered or ACC, if you are going to do chartered in business level 2, you have investment appraisals. In corporate level, you have business investment appraisals. In strategic level, you are having investment appraisals. And if you are going to do ACCA in financial management skills level, you have investment appraisals. In advanced financial management, in professional level, you have investment appraisals. So see, the knowledge you are getting from AAT, right, will be really important for your career. So whatever you are learning here, the basics, the basic principles of investment appraisal is not only for your AAT examination, that will be for your future examinations. And when you are becoming a finance director, CEO, director, chairman, or whoever, the financial management knowledge, the investment appraisal knowledge you are getting here will be really important. So I hope you all downloaded the paper. Anyone needs time? If anyone needs time, I can wait. If not, I can directly go to the question. And through this question, student, now I know maybe you are not aware about some of the concepts. So what I'm going to do, I will go through the question, but I'm trying to revise the knowledge, the concepts, right? So though you are not having the knowledge on this lesson, doesn't matter. I will make sure I will teach this, and through the question you will be able to understand each of these concepts. Maybe this is not 100% theory lesson session, but I will try my best to, teach whatever the basics also through this question, right? So at the end of the session, I hope you will have the full knowledge on investment appraisal, the NPV concept. There are different concepts, no, NPV, right? Different models, different ways that you can calculate the value of an investment. So whether that is suitable, feasible or not. So NPV, you have payback, you have IRR, you have profitability index, different things, but we will be focusing on NPV, right? So students, let's go to the question. So question number 9 in the paper, right? And so what they're asking, you are required to do what? Compute the net present value of the modification of machine and identify whether company should modify existing machine, right? So before going for that, I just read the requirement. Why this is needed, students? Investment appraisal. Let's look at from your personal life. Let's say once you are done with AAT, maybe once you become a chartered accountant or an ACCA member, right, after AAT, and you are having a very good job. So you are a finance manager, head of finance or director, whatever. So you are going to build your own house, right? You are going to build your own house. Then, now what you are going to do is you are paying, right? You are investing, right? You are investing. Okay, you pay and you invest for your house, your home. Now you have to see whether that investment is feasible. Maybe when you are becoming a qualified professional, you are going to buy a new car. So you have to see whether this new car is feasible. So that's from the personal life. But when you are becoming a businessman, maybe when you are becoming the CEO, so your company is going to start a new business, a different business in a different industry, right? In that case also, what you have to do? You have to see whether the investment is feasible. Let's say, students, this is the business, right? So this is the business. So you are a part of this business. You are a part of this business. And the investment for this business is, right? Investment for this business is 10 million. So 10 million seems like a big amount. That's because you are at this level still. But since you started AAT, and after this, whatever the qualification you are getting with the experience, So 10 million will be nothing for you. So you are going to invest 10 million. Now, are you just investing 10 million without looking at the benefit? No, right? We cannot invest in any business without looking at the return. So what you are going to do? Now you are looking at, okay, this is the investment. So year 0, I need to invest this much. And what would be the benefit I'm going to receive from this investment? So now what you're looking at? Okay, then how much I can earn from this business, right? මට මේකෙන් කොච්චර earn කරන්න පුළුවන්. So in year 1, how much I will be able to receive? In year 2, how much I will be able to receive, right? And year 3, how much I will be able to receive? So likewise, whatever the number of years the business will be there, how much you can receive. So you have to see that. But the thing is, students, now I know you guys are really well in financial accounting. So you are always looking at the profit, right? Accounting profit. But when you are become a business owner or a CEO, you don't care about the profit, the accounting profit. Why? You are someone who will be carrying what? The cash profit, right? Because without cash, you cannot do anything. Let's say your profit is millions, but your cash is a negative one. So, are you really satisfied? No. That's why when it's come to capital investment appraisals in NPV, right? NPV, you are looking at what? You are looking at the cash flows. So when you are looking at the investment point of view, first year, second year, third year, whatever the number of years, you are looking at what? You are looking at cash flows only. Cash flows only. Right? So students, make sure when it's come to NPV, you have to forget all the others and you have to think cash, cash, cash. When you read the question, now I'm asking just before reading the question, when you read the question, you have to always make sure how much is this, right? And when this will happen, make sure. When we do this question, so you have to make sure these steps. First step, right? If you know these steps, you can definitely attempt this question and get full marks. Whatever 15 or 13, whatever number of marks you can get. First one is, students, you have to identify the project time period. That is the first one. Project time period. Project time period. The second one. The second one, right? So project time period you have to identify. Okay. The second one is what? Cash flow is how much? How much is the cash flow? I mean, how much you are receiving? The value, right? Cash flow value. That's the second one. Students, even though you know the value, it doesn't matter why, right? It will not give you marks until you know what? Until you know what? When the cash flow gonna happen, right? So cash flow, how much? Will not guarantee you a mark until you know when it will happen. When means whether the cash flow will happen in first year, whether the cash flow will happen in second year, will occur in third year, fourth year, 0. Now before reading the question, I'm telling this. Why? Because when we read the question, you have to identify this. It's not done in any lesson. Just the question understanding. Then the fourth step, right? So this is cash flow when. The fourth step. Fourth step is what? Then you calculate the net cash flow. Net cash flow, right? And the final one. So this is involved in different number of years. We are not looking at this year. We are not looking at the next month. We are looking at a 3 years horizon or a 5 years period, 10 years period. So which means we have to do what? We have to do the present valuation, present value. So these are the steps, and make sure now when we read this, you have to be careful on the first three, right? So if you can understand these first three only, we can do this question. And this question is really time wasting. So please make sure, students, when you do your paper, right, you have to be really careful on handling this question. So examiner is giving you how much of time to complete this. So this is a 15 marks question. So normally for 1 mark, he is giving 1.8 minutes for you. So this is a 15 marks question into 1.8. So that is 27 minutes. So you should be able to attempt this 27 minutes. At least I would say 30 minutes, right? At least 30 minutes, very difficult, very difficult. And even if you do this question with the cash budget question, so sometimes you will struggle, sometimes you will struggle. So it is your responsibility and your practice and your understanding, okay, when I will attempt this question. And you have to be really, really you have to have the experience on attempting this question. So that's why you have to do some question practice at home. Okay, so let's go to the question. Let's read. And student, make sure at the examination you can highlight, right? You don't need to underline from your pen. So this is what most of the students are doing. They are only what? They are just writing down from the pen, right? Just underline. So just underline will not easily recognize, right? So you cannot recognize easily. No? So you can bring a highlighter to the examination. Okay, so get a highlighter. Why? So whenever I highlight you, so you will be able to, okay, see this one. See, Raw Limited manufactures highly specialized spare parts for large ships. The effective lifetime of the main machine used for the production of these parts has expired, and the existing machine, which is fully depreciated both for accounting and tax purposes. However, the management has decided to modify the existing machine. The modification of the machine is expected to cost rupees 65 million. Rupees 65 million. So I highlighted this. Why? Because that's an important one, right? And is expected to prolong the useful life of the machine by another 5 years, with an estimated residual value of rupees 5 million at the end of the 5th year. So see, so your machine, the expected cost is 65 million. So it will be there for 5 years, and the residual value is 5 million. Then for the tax purposes, the modification cost can be considered for capital allowance at the rate of 25% per annum. While the company uses the straight line method for depreciation of accounting purpose, right? So before going for the next section, let me know, students, now how many years you have to rule to do this question. How many years? From which year to which year? From which year to which year? So you can send to the Q and QA, right? You can send the answers. So how many years? From which year to which year? From which year to which year? From which year to which year? Yes, very good. Yes, right? Ishfaq, very good. Nazil, very good. Renushi, very good. Fatima, very good. What? Yes, 0 to 5. Yes, 0 to 5. Yes, Shifa, yes. I have to include year 0 as well. Year 0 as well. So year 0 to 5. So you don't need to, rule like this, but I would say if you can do like that, because student, if you are having the rule like this, right? So let's say it's going like this. So when you are writing, very difficult. Just use a ruler. It won't waste the time. Even if you are doing A levels, you can use a ruler. Even when I was doing A levels, I did like this, right? Some people are telling using the ruler will waste the time, but it will give a clear picture. Now my handwriting also not really perfect, but since I'm having this one ruler and rule, so it looks good. It looks good. So whoever the marking the paper, so we'll be able to clearly see this one. It is visible, right? So year 0, I will tell you what is this year 0, year 1. Don't worry. Don't worry. So year 1, year 2, year 3, year 4, and finally year 5. Right? Finally year 5. Okay. Right. So let me write down them. The number of years. You can say year 0, year 1, year 2, year 3, year 4, and year 5. Right? Okay. So let's read the question and we'll come back to the calculation. Right? So what it says, the working capital investment for this is rupees 6 million. 6 million. So working capital investment is 6 million. Assumed to be recoverable at the end of the project. Assumed to be recoverable at the end of the project. If the spare parts production for ships using this machine is commenced, the sales are expected to be as follows. Sales are expected to be as follows. So year 1 given sales 2, 3, 4, 5 sales given. Right? Sales given. Then during the first year, the sales price is expected. The sales price is expected to be 20,000 per unit. The variable production cost during the first year would be 10,000 per unit. So first year sales price given, variable production cost given. Then thereafter the variable production cost as well as the selling price are expected to increase at the rate of inflation, which is estimated to be 8% per annum, right? So this is estimated to be increase. Then the fixed overheads per year is estimated to be 9.5 million. The fixed overhead is 9.5 million, excluding depreciation. Excluding depreciation, right? In order to increase sales, the company plans to spend rupees 8 million at the end of first year as marketing expenses. Now see student, when I highlight, why it is important to highlight? So when you are doing the question, when you answer, it is clearly visible for you, right? And when you write, when you underline in the pen, it's not really visible like this. Sometimes the word will be cut off, right? අකුරු කැපිලා යනවා. ඒතර අමාරුයි. ඒක නිසා පොඩක් අර smart වෙන්න. Right? Be smart at the exam. So in addition to that, I don't think that you are not having money to get a highlighter, right? So in addition to that, sales commission of 6% on sales value has to pay it from first year to 5th year at the end of each year, right? So from sales, so like you receive sales, you have to pay a sales commission for them. So that's the normal business norm, but I don't think whoever will be, right? No one will be paying 6%. The company pays income tax at the rate of 30%, which is the current tax rate as well, and it should be paid in the same year. So the cost of capital of the company is 15% per annum, right? Okay, so we are done now. What? We are done with reading. So it's time for the question. So students, I will go one by one. I will go one by one. So what it says, there is a investment. So now first one is done. Okay, number of years we identify. So investment, what about the cash flow? The cash flow is 65 million. Okay, so investment cash flow is 65 million. 65 million. So I really don't have spaces. So because of that, I'm doing this in rupees 1000 or LKR 1000. So 65 million, right? You know, this is thousands, right? This is 100,000s, millions, then billions. The next one is the trillion. Okay. So investment value, you know, when this investment you are going to utilize, you are going to invest, which year? Which year? Right? Which year? Make a method. Make a make. Right? Which year? Which year? Yes, Lamai. Right? Which year? 65 million. Right? Very good. Very good. Right? Spark, very good. Nasil. Right? Nasil. Sadhana. Right? Davini. Tivya. Imasha. Renushi. Rusek. Right? Okay, so everyone knows when you are having the investment. So investment is in year 0, but it may not be practical every time year 0. If you are coming for chartered or ACCA, maybe they can say investment, the 50% investment will be having in year 0 and the remaining 50% in year 1. But here, nothing to do like that because it's always year 0 normally in AAT question. So investment, how much? That is 65 million. So I'm doing this in thousands, so 65 million done. And what it says, there is a what? There is a residual value. There is a residual value. Residual value what? Residual value after 5 years, which is 5 million. So when there is a residual value, so now this is a cash outflow. Investment is a cash outflow. Cash outflow. So cash is going. So after 5 years, what's happening? After 5 years, what's happening? After 5 years, so this is 65 million. You invest now, it's a cash outflow. So after 5 years, yes, end of the 5th period, right? So that's what it is. Very good, Nasil. Very good. Very good. It's a cash. Yes. It's a yes. Spark, very good. It's a cash inflow arm. So year 0, your investment is a cash outflow, and year 5, they are telling, so there is a estimated residual value, which is a cash inflow. So what you have to do? So like you recognize this as a cash outflow, so year 5, you have to recognize the same as a cash inflow, which is 5 million, which is 5 million investment. Okay, 5 million. Then the next one is the working capital. So they are telling the working capital. Working capital is 5 million. Right? Working capital is 5 million. Now, before going for that, students, in investment appraisal question, so answer me, right? Normally, we assume the cash flows will happen in a year. Which day? Which day in a year? Normally, we assume like that. What's that? What is that? Normally, right? When the cash flows are happening, yes, Imas. Very good, Imas. Others? When Lamai? Cash flows are normally happening when? You should be having this theory knowledge, make sure. This is a basic concept in investment appraisal. So if you are not knowing this means, I mean, you haven't learned the entire investment appraisal. Okay. So this is a revision, but I'm trying to give that also. When, students? When? So only one answer came. Only one answer came. What is that? Normally the cash flows will happen in the year end. So if this is 2024, this is 2024 December 31st. If this is 25 December 31st, right? So which means we are assuming the cash flows will not happen in the middle of a year or a beginning of a year. But your examiner can sometimes say this cash flow will happen in the beginning of the year. Let's say year 3 beginning. Your examiner is telling there is a cash flow. Now here you have advertising expenses. No? But examiner would say in your examination, in 10 days, whatever you are writing, 2025 January, examiner will tell you the advertising expenses will occur, will happen in year 3 beginning. Now, where you need to put this? Where you need to put this? So if it is happening year 3 beginning, where? Where you need to put? Where you need to put? Tell me. Where you need to include? Where you need to include? Am I? Not sleepy, right? Not sleepy. Yes. Yes, Imas, very good. Ishfaq, very good. Others? Others? I think Rusek also answered the previous question. Others? Others? I think only boys are answering well, no? What about girls? Right? Others? Here, Sadhana, right? I hope Sadhana, not Sadhana. Right? B. If you are a Sadhana, tell me. Okay. So, others? Very good. Student, make sure. If the examiner says it is the beginning of a year, which means the end of the previous year. So, it's like this. Let's say January 1st, but you don't normally put cash flows in January 1st. So January 1st means it's like December 31st. So if there is a cash flow at the beginning, so if it says year 3 beginning, student, it should be year 2. If the examiner is telling you year 1 beginning, that means it is year 0. It is year 0. Very basic concept in investment appraisal. The first thing you have to learn when you put this, right, year wise, this is what you have to learn, right? Okay. So when you are coming to next level, so Charad or ACCA, you will learn if it is, let's say, September, you put it to the year end. If it is March, the previous year end. I mean, it's not needed here. Then the next one, so working capital investment. So working capital, now it's student, it doesn't specify when it is happening. So I told you, you have to know the value, amount, and when that is happening. But it's not mentioned, no. So when the working capital investment you have to recognize. So it says working capital investment for this is 6 million. 6 million. So when you need to recognize? When you need to recognize working capital. Working capital. Working capital. When you need to recognize? When you need to recognize? Year 0. Yes, year 0. Right? Year 0. So which is how much? 6 million. So why year 0? Practically the working capital will be investment normally in which year? Practically, I mean which year, which time period? Exactly which time period? No, practically. What is working capital means? Working capital means the fund that is required for you to do day-to-day operations. Let's say to buy inventory, to manage debtors, to manage creditors, whatever the cash which is needed for you, we call it as working capital. Student, normally are we investing working capital in year 0? Normally, are we investing? No. Let's say you are going to start a shop. So you will invest for the buildings and all. Are you going to put your money to buy the inventory also at that time? No. So what is normally happening? So we will be investing that year 1 beginning. Why? Because to run the business, you need to buy inventory. And that's where you need working capital. That's the practical scenario. Right? Year 1 beginning, you need working capital. So I told you, if it is year 1 beginning, you have to put in year 0. That's why you put in year 0. Make sure. That's really not because you invest now, but because you have to invest when you are starting the business. Because to generate sales, you need to have inventory. That's all. And the examiner is telling you what? Assume to be recoverable at the end of the project. So if you are going to recover at the end of the project, it's a 6 million plus. Right? This is 6 million minus and this is 6 million plus. Okay. So you are investing, it's a cash in outflow, and you are receiving, it's a cash inflow. Now that's okay. Examine is clearly mentioned. But at your examination, right? Right? We are lucky, you know. So everything will happen to us. Right? So at your examination, examiner will not mention this. So this is the working capital. And examiner is not mentioned when it is recovered or not. So what to do now? Let me know. Let me know. Let me know. So these are, student, make sure when you learn, you need to get the knowledge. You need to get the practical understanding as it. But at the end of the day, you have to pass the exam. If you want to pass the exam, you have to get marks. If you want to get marks, you have to know how to answer when a question is given. You have to know how to grab marks. You cannot just get marks, right? Each and every point is important. So if the examiner is not giving you this information, what to do? Let me know, right? If the examiner is right, if the examiner is not giving you, yes, Shifa, it's a good answer. Yes, Nasir, that's also good answer, right? But not the perfect answer. Still, you can go ahead with that. So if the examiner is not mentioning students, if the examiner is not mentioning, you have two ways. What's that? Either you can put in as a recoverable, recovered in year 5, or not recovered. Not recovered. Recovered in year 5 or not recovered. But whatever you do to get marks, you have to do something. If not, you will not get marks. Right? Let's say you put in year 5, you are not getting marks until you do this one. What's that? Let's say you are not putting it. You will not get marks. You have to do what? You have to put something. What is that? You have to put something. What is that? What's that? Right? Yes, Renushi, very good. Very good. Others? Others? What do you have to do? Yes. Others? Polamai. Anitaya? You have to do what? If you want to get marks, you have to, yes, Rosek, yes, Churafa, yes. Basically, it's not, but what we call it assumption. Make sure. So if the examinee is silent, doesn't matter. You can either put in year 5 or not put in year 5, but very important to put this, which is the assumption. So you can either say it is assumed it is assumed that the working capital in year 0 will be recovered in year 5. You put it, you get marks. Or you can say it is assumed that the working capital in year 0 will not be recovered in year 5. You still get marks. Make sure. But let's say you put in year 5 without the assumption, you are not getting marks. Okay? So when you are done with the exam, you came home. Okay, you are telling to your mom, Amma, Ma, or whatever, right? Your son will get an A pass, right? But you are not getting an A pass. Why? Because you are overconfident. You didn't put those information. So that's the second one, working capital. The next one is students. So it's a very important adjustment. So which you are getting a high mark. So spare parts production for ships using this machine is given. So sales are expected to be as follows. So students, sales means a cash inflow. Then variable cost is cash outflow. So cash inflow and cash outflow. Okay, cash inflow and cash outflow. Then sales is a cash inflow, variable cost is the cash outflow. So you can do this in two ways. Either you can put sales and variable cost both, or else you can do what? Or else there is another way. What's that? There is another way. What is that? Yes, very good, Farah, very good. Others? Yes, very good. Danushika, right? Danushika, Sadhana, right? Shurafa, yes. Contribution. Fatima, yes. So either you can put the sales or variable cost, or you can put the contribution. So in this question, you can put the contribution. Why? It says the inflation for the selling price as well as the cost is 8%. So you can put the contribution. Why? Because both are increasing at the 8% rate. But if the examiner says selling price will increase by 10% and variable cost will increase by 8%, in that case what? In that case, you cannot calculate from the contribution aspect. Why? Because one is increasing at a different rate and the other one is increasing at a different rate. So in this case, you have options. In single and medium session, I did from the contribution aspect, but let me do in sales and the variable cost. If not boring for me as well, right? So not boring anyway. This is not boring for me teaching, right? So sales, I'm a chartered and ACCA lecturer as well. My passion is teaching, so it's not really boring. So sales, then the next one, variable cost. So basically the variable production cost. So this is working 2, right? Or maybe I can put in that same in working 1. So I'm coming here. I don't really have much space like you. So I'm just putting this in a rough way, and I need your help. Students. So examiner is telling you the selling price. The selling price in year 1 is how much? Selling price in year 1, which is selling price in year 1 is 20,000. And the examiner is telling what? The selling price and the variable cost will increase by 8%. So what you have to do? Now you have to calculate the new selling price in the second year, third year, fourth year, fifth year. So how to calculate? 8% increment. 8% increment. So 8% increment is how much? So 20,000 into 8%, 21,600 Farah. Very good. 21,600. Right? then third year again 8%. So likewise you have to put all the 5 years. So help me with answers. Third year how much? 23,328, right? 23,328. If it is wrong, please let me know. 23,328. 328. Then again year 4, which is 25. You don't need to have decimals. 194. Year 5, which is 27, 20, 2110. 209. So which is 2110. Correct, ne? 23328. Thank you, Dhanushika. Right? Consul, yes. Okay. Other two also correct, ne? Right. Then number of units. So sales units. So units given in the question, which is in year 1, 4,000. Then year 2, 4,000. Year 2, 6,000. Then year 3, 8,000. Then year 4, 5,000. Year 5, 4,000. 4,000, right? Then students, then you can calculate sales value. So I'm calculating in thousands. Make sure you can see I don't really have spaces. Okay. So help me, right? 20,000 is the selling price, that into units, number of units. So these are like O-level maths, no? Not even O-level, grade 5 maths. So 8 million, here 8 million. And the next one, which is 129,600. 129,600. Then 186,624. 186,624. Then 125,970. 125,970. Right? There are any mistakes, please let me know. 108,840. Right? Correct, no? First year is 80,000. Sorry. Thank you. 80,000. Yes. Others? Are there any mistakes? So how you are getting the sale value, right? So selling price, you have selling price and you have number of units. So this into this and this is in thousands. Okay. Okay, no? Hola, okay. Hola, okay, right? Okay. So sales. Now grade 1, what you had done in grade 1, copy and paste, right? So 80,000. So when you were practicing handwriting, copy and paste, you look at and write, no? Same thing. Make sure students, workings are really important. Workings really important. So if this is wrong, you will get marks from this. And also you have to show how you are getting 80,000. You cannot just put, if not examiner will suspect you have copied. 125,970. 970. Then 108,840. Right? Right. Okay. So variable cost, how to do the, so variable cost per unit given first year, variable production cost first year, which is 10,000. So first year 10,000. So what's happening? Same like selling price, it will increase by 8%. It will increase by 8%. So in your examination, examiner can give you like this. Maybe sales, the total number of sales. Maybe examiner will give you sales and contribution. Examiner can give you sales and the sales CS ratio, contribution margin. So you can find out how much is the contribution. Now student, make sure to do this one. Now this is marginal costing. Basically, if you are going with the contribution, it's marginal costing. Should you always put if there is a residual value in year 5? Yes, I mean not the year 5. The project is year 3. It's the year 3. So normally residual value, if the examiner is not mentioning, that is the last year. But you have a point. Rukaiya. Yes. So let's say if the project is 5 years, but the examiner can say this machine, so you will have a residual value after 3 years. But make sure after 3 years you should be able to continue the business. Let's say you have 2 machines. So examiner can, let's say this is this project, examiner can say this machine will be sold at the end of the 3rd year, and at that time they will be again investing for a new machine now. Then so residual value is here, and you will have another investment in year 3. But that's not in AAT final. So you come to ACC or CA, you will learn this, right? But normally in AAT final, it's simple. At the end of the project, residual value. And if you are unlucky, maybe examiner can give you something other than that, but I don't think he will do like that. So 10,000 into 8%, 10,000 into 8%, which is 10,800, right? So again 8%, so 11,664, again 8%, 12,597, then 13,605. Now when you have decimals, you can always get the rounded figure. Right. Okay. I think my answer is correct. No? 13,605 Mohammed. Yes. Rajin. Yes. Thank you. Mohammed Saru. Right. Yes. So check year 3. It's year 3. 23,328 into 8,000. 186,624, right? That you told it. No, it's correct, I think. This one, this is 23,328, right? 21,600. No, anyway, if there is more difference, that's okay. So that into 8,000. No, it's correct. It's correct. Okay. So now copy and paste. So this is a cash outflow, which is 10,000, and here 10,800, 10,800, then 11,664, 11,664, then 12,597, 12,597, then 13,605, 13,605, 13,605, right? Okay. So sales done, variable cost done. The next one. Next one. In order to increase sales, the company plans to spend 8 million at the end of first year. So at the end of first year, the marketing expense is 8 million. So you have to recognize that. So fixed cost, for fixed overheads, I miss the fixed overheads. So fixed overheads per year is estimated to be 9.5. 9.5 excluding depreciation. So why the examiner is telling you excluding depreciation, students? Make sure. Why? Non-cash flows you are not going to recognize. Not going to recognize. So very important one. Non-cash items. Not recognized. Not recognized. So you should be able to know these. And let's say if the examiner is telling you before investing on this machine, so they have done a research. For the research, they spent 1 million. So what do you have to do for the 1 million? What do you have to do for the 1 million? That's what? That's a sunk cost, which is already done. So are you going to recognize sunk cost? No. You are not recognized. But can you get marks when you are not recognizing only? So how examiner will know that you know this concept? So examiner will put, okay, there is a sunk cost like this. Examiner will not tell you a sunk cost. Examiner will tell the research cost to analyze whether this machine is, this machine information, to receive this machine information. So they have done a research, the cost is 1 million. So you are not putting it. So how you get marks? Make sure you have to put a note. You have to put a note telling what? So this research is a sunk cost, and the sunk cost will not be recognized in NPV calculation. If not, you will not get marks. Make sure. You have to know where are you getting marks, where you are getting marks, where you are losing marks. Okay. Sometimes even your final answer could be correct, but you will not get the full marks. Make sure. An examiner will tell you research done, but the payment not done. Still payment not done. So are you going to recognize it? No. Why? It is a committed cost. It's a committed cost. It's the committed cost. So committed costs are not recognized. Are not recognized. Why? So doesn't matter whether the project is happening or not. You have to pay it. Right? You haven't paid, but doesn't matter. You have to pay it. So like, right? So just join. Where can I get the question? So this is 2025 July past paper. So you can get from the AAT website. Just search as AAT past papers. Download. So this is the 9th question. And likewise, there are many, right? Centrally allocated overheads, incremental cost, incremental saving, the cost saving. So likewise, I hope you are having that knowledge. So that's basically the theory, the basic concepts. Okay. So you have to have the basic knowledge on the theory. This is a revision session, but I explained some of the concepts as well, like a theory session. So sales, this is done. So let's come for the fixed cost. Fixed cost. So is it fixed cost or fixed overhead? Fixed overhead, right? Fixed overhead. Now, when you are doing the fixed overhead calculation adjustment, you are not getting the same marks you are getting for this one, right? So you might be thinking, okay, for this one also you are getting 1 mark, here also 1 mark. No. If you are getting 1 mark here, you will at least get 2 marks for this. So make sure, student, if the adjustment is time wasting, if the adjustment needs more time, requires more time, right? And if the adjustment is complex, you will get high marks. You will get high marks. Yes. Sorry. Yes. Variable cost. Yes, sorry. Right? So I didn't multiply. Variable cost per unit given. So I made a mistake, right? So we have to multiply by number of units, right? So this is for the variable cost per unit. Per unit. So the total variable cost. I just tested whether you are on the session, right? No, I really made a mistake. So units you have, right? Units. So units and units into the variable cost per unit. Variable cost per unit. So you will be able to get the total variable cost. I will be doing that in 1000. Okay, so help me. 4,000 into 10,000, which is 40 million here. 40 million, basically 50% of this, I hope. Then 6,000 into 10,800, 64, 800, then 8,000 into 11,664, which is 93,312, 93,312, then 5,000 into 12,597, which is 62,985, 985, then 4,000 into 13,605, so that is 54,420, 52,420. Okay, correct? No? So are we okay? Are we okay? So this is a minus cash outflow. Are we okay? 64,800 and 93,312, 62,985, final one 54,420. 420, no? Are we okay? Can someone confirm whether numbers are correct? So until that, I will write the fixed overhead. So fixed overhead is fixed for 5 years, which is 9.5 million. 9.5 million. $9.5 million. 54,416. What's that? This is 54,416. It's correct, right, Dhanushi? This is 4,000. No? So 4,000 into 13,605. 54,420. I mean, maybe you have done it from decimals, right? So don't need to. Yes, right, Fatima. Thank you. So I mean, no need to get from decimals, Buddha. You just get the rounded amount. So from the rounding off amount, you get the variable cost, right? So fixed overhead done. So then it says there is a marketing expense. Marketing expense, right? So marketing expense is how much? 8 million first year. So marketing expense, which is in first year, 8 million. 8 million at the end of the first year, which means you have to put in year one. Year one. Now simple, no? You know the amount and you know when it happened. So after that, then you have sales commission. It says sales commission of 6% on sales value. Sales commission, which is 6%. So how to get the sales commission? So sales commission, which is 6%. So sales commission means from the sales value, you have to calculate the sales commission. Right? From the sales commission, you have to calculate the sales value, sales commission. You have to calculate from sales. Right? So that's how much. So this is 80 million. From that 6%. which is 4,800. And this is 129,600. From that 6% is 7,776. Okay? Are we okay? Then 186,624, that into 6%, which is 11,197. 119. No. 7. Then 125,970. 125,970. So 7,558. 7,558. And 108,840, which is that also in 6%, into 6%, which is 6,530. 6,530. Okay? Are we okay? There are any differences? Let me know. So sales commission is a cash outflow. So this is 4,800. And this is 7,776. And 11,197. 11,197. So 7,558. 7,558. 7,558. Then 6,530. Then 6,530. 6,530. Sales commission. Okay? Right? No. When at the end of the year, not the beginning of the year 0. No. Right? If it says beginning of year 1, so then you have to put in year 0. If they are telling end of year 1, that's okay, right? End of year 1 means so. That's year 1. Because normally we are assuming everything will happen at the end of year. Okay? So if it says beginning only, you have to think. Right? Thank you, Rusek. The confirmation. Right? Okay. Then the next one now, student, make sure now today, the last time 2024 August students so participated to the BMICH to get their qualification. Even I also participated. So there are many students who are really done with A levels, maybe who will be doing A levels. So this is the first qualification you will be getting. I hope this is everyone's first qualification, and this is the youngest age that you can attend to BMICH to get a recognized valuable qualification. There are different qualification, valuable qualification. Make sure you are done with 2/3 of this qualification. 66% is done. So please make sure putting your maximum in these days is really important. Okay? Why AAT Sri Lanka is organizing this kind of a session? So that's basically maybe there are some students who are not afford for classes, right? So that's the reason why free of charge. Even I will be paid a lecture fee for this session, but I told I'm not receiving it. So please transfer that to whatever fund that they can facilitate for students who are not able to afford. So why I'm also doing this as a satisfaction as a lecturer, and please make sure get the benefit, and not only from this session, from whatever your notes, whatever the classes, please make sure you get the knowledge and you give your best shot, and definitely within 6 months. So today the previous batch is having they concluded, so which means after 6 months definitely, right? Okay, my sister attended too and she spoke to you. Okay, I cannot read that name, not ethical. No. Yeah. Yes. So congratulations for your sister as a. So what I'm telling you, student, after 6 months, definitely you have to attend the BMICH. So not only this subject, you have to pass all the other subjects. So please make sure that should be the starting point. If not for AAT, maybe I will not be I'm not achieving chartered accounting qualification, not the ACC qualification, whatever. So this basic foundation is really important. At a very young age, you started doing a professional qualification. This 10 days would be really crucial, really important. Okay. So please make sure to put your maximum. Okay. Right. So other than this, students, so do we have any other item other than this? So some student requested my contact number as well, but I'm really not able to give it because this is a session organized by AAT Sri Lanka. So please, right? Sorry for that. So it's not good. I'm a chartered accountant, I'm a ACC member, so I have ethics, right? Let me know. Other than this, are there, because I cannot promote through a session like this. So other than these, students, are we having any other items? Can we conclude? Can we conclude after this? Do we need to put anything? Yes. Right? Yes. Tanushika. Yes. Tanushika. Yes. Easterwell. What is that? Yes. Why? Why we cannot conclude? Why we cannot conclude? Fatima, yes. Shfaq, yes. Rukaya, yes. Tax. So you have to have tax. Make sure for the tax adjustment, you will at least get 2 marks. At least, I'm telling you, at least. Sometimes it could be 3 marks. So this adjustment is really important. Yes, right? Rasna, yes, very good. So you have to do this adjustment in most of the examiner tested. So tax. So that is the working 2 for tax. So basically this is the tax payment. So students, you pay tax on which profit? You pay tax on which profit? You pay tax on the taxable profit. You pay tax on the taxable profit. Right? You pay tax on the taxable profit. You pay tax on taxable profit. So here 1, 2, 3, 4, 5. What you need to do first? To get the taxable profit, first of all, you have to get a profit. What is that? Which profit? You are getting a profit called what? The accounting profit, but before depreciation. Because this fixed cost is without depreciation. If the depreciation is included here, what you have to do? You have to remove depreciation. Why? It's an uncash flow. So depreciation is not included here, no problem. Then, get what? Profit before depreciation. So students, if the profit with depreciation given by the examiner, make sure. So let's say accounting profit given. Accounting profit means that is after depreciation. So let's say accounting profit is 10,000 and depreciation is 2,000. Let me know to get the taxable profit. Now before doing the capital allowance adjustment, you have to add this depreciation or minus this depreciation. Accounting depreciation, you have to minus or add. Are we deducting? No, you have to add. Why, students? How you calculate the accounting profit? That is after removing the depreciation. So once you remove the depreciation, so let's say profit before depreciation would be 12,000. So you remove the depreciation, then accounting profit is 10,000, right? But what you need to get? Without depreciation. So without depreciation means when you add the depreciation, profit is going down. What you have to do? You have to add back the depreciation. So make sure at the examination, if the examiner is giving you the profit, accounting profit with depreciation means after deducting the depreciation, right? You have to add back. And here you don't need to add back. Why? Here you don't need to add back. Why? Because fixed cost is not having depreciation. It's not there. No problem. Make sure. Examiner can give you the detailed information in different ways. Reading is very important and understanding the concept is very important. Right? So, profit before depreciation. Now, how to find out? Let me know. So here year 1, make sure sales, then minus variable cost, minus fixed overhead, and all other is like that. But year 1 you have marketing expenses also, then sales commission. You get the net cost of this, net income of this. That is the accounting profit before depreciation, which means without depreciation. So in year 2, you don't have marketing expenses, but get all, right? So let's calculate the profit each year. Year 1, accounting profit, before depreciation. So profit before depreciation in year 1 is how much? So 80,000. Tell me answers. I need your answers. So in Sinhala medium session, many students gave me answers. I didn't want to really calculate. So I need your support here as well. So how much? Year 1, 17,700. Year 2, Dhanushika. Thank you, Dhanushika, right? I hope Dhanushika. Second year, let me know. Year 2, am I? Year 2. How much Lamai? Year 2, how much? Yes, 47,524, right? 47,524. Year 3, how much? Year 3, how much? Right? Tell. Year 3. 72615. 72615. Then year 4. Very good. Year 4. 45,297, right? 45,297. 45,297. Now, year 5. 38,390. Is it? 38,390. Is it? 38,390. So fourth year 45,927. Yes, correct no? 45,927. It's correct. right? Right, okay. 38, 3, the fourth year, 45, fourth year, right? Fourth year, 45, 297. 45, 927. Sorry, 927. Dang, you know, doing 927, right? 38, 390. Final one, fifth one, 38, 390. Yes, that's correct, no? Okay. So profit before depreciation done, student. So after that, after that, what you have to do? You have to put the capital allowance. Because capital allowance is the normal adjustment you need to do when you are doing what? When you are doing the tax calculations. After that, you can get the taxable profit. Taxable profit. So one student can ask me, so this investment, you are receiving the scrap value 5,000. So can't we consider this as an income in the fifth year for the tax calculation? So it's a decision from you. Why? Examiner not really mentioned. Normally student in this paper, because this is not a taxation paper, this is a management accounting paper. So in management accounting, the only tax part would be the capital allowance part. So examiner expects you to only use the capital allowance adjustment to calculate the tax profit, taxable profit. So in this case, doesn't matter, but make sure you put the assumption. If you assume this 5,000, you will recognize as an income which is taxable for the tax purposes. Because student, there can be different expenses. Even marketing expenses, I don't think the total could be allowable like this. There are certain cases. I can remember like 5 years ago, it was there like 25% allowed, 50% allowed. I don't know the current tax rule. But so they are like that. So here you have to assume whether this 5,000 you recognize as an income for the tax purposes or not. So you put whatever your assumption, you get marks. So I'm not really recognizing here, but if you need, you can do it. Then deduct the capital allowance, you get the taxable profit. So how to deduct the capital allowance? It says, so capital allowance is, it says the capital allowance is, tax rate is 25% per annum, which is the capital allowance. So your investment, which is 65 million. So how much would be your capital allowance? 65 million. So 25% is the capital allowance rate. So which means 16,250, right? 16,250 is the capital allowance. So how much you have to put? Year one done. So you are putting how many years? All years, 5 years, is it? So all 5 years, right? All 5 years you put. Is it? No, it's 4 years. Yes, Fatima, very good. What? Very good. Right? Yes. So fifth year. Why? Fifth year you cannot. Yes, Dhanushika, yes. Sharafa, yes. Why? Because 25% is the tax rate. So once you are done with 4 years, what's happening? The total is claimed. So 25% at the end of second year 55, third year 75, and finally 100%. Now which means after fourth year you cannot claim it. So fifth year no tax capital allowance. So if we recognize that investment in year 5 without writing the assumption, we won't get marks. No, I don't think. If the exam is a little bit difficult and if the examiner wants to pass you, let's say you are getting 48 marks, then examiner will consider it and give you. But if you are getting 73 marks, to get an A pass, I don't think examiner will consider it. Because examiner is really concerned on the failed students. So if the student is getting low mark, 48, something like that, 47, even you have a chance to get through even after getting 45, 43, even 41, if you score more than 50 for other 3 subjects. Let's say you are getting more than 50 for other 3 subjects, but management account, I hope you are not getting less than 50 for management accounting. But let's say you are getting 41 for management accounting or 40, I think 41, yes. So still you will be getting a D pass. So why you get a D fail? If you are failing any other subject, so you get a D fail. So anyway, 50 for the 50 mark that examiner can consider, but I don't think for the others. So please make sure to put the assumption, right? I mean, for the safe side, it's good, no? For the safe side, it's good, right? Pass mark is not the 40, right? Pass mark is 50. Pass mark is 50. But let's say if you are doing all subjects, definitely you have to do whatever the remaining subjects. So normally the first time you have to anyway do all 4 subjects. So let's say you were getting 60 for one subject, 50 for another subject, 75 for other subject. So all these you are passed now. And per one subject, let's say you are getting 41. So you get a D pass, right? You get a D pass. But let's say one of these is 35, this is 35. So this is fail, right? This is fail. And this is a D fail. This is a D fail. That's also fail. Okay? Please don't target 40 marks. You. Let's target an A pass for management accounting, right? Okay? So taxable profit. Taxable profit, students. So 40, don't think 50 at least 75 is your target, right? So 17, 700, 16, 250, so which is 1450. 47, 524, 47, 524. Then 16, 250. How much? 31, 274, right? 72, 615, 16, 250, which is 56, 365. Then 45, 927, 45, 927, then 16, 250, which is 29, 677. Then here 38, 390. 38, 390. Are we okay? Is this possible to pass within 1 month? Can pass? Yes. Anyway, now you don't have 1 month. You have 10 days. I know there were students who achieved an A pass even a month. So it's about your commitment. But I don't really say within 10 days you can get an A pass if you are in zero. Zero, very difficult, right? But if you are really committed, but if you are having high brain capacity, even this time period also enough. Very extraordinary student can get an A pass. But normally 1 month also, if you really put your commitment to study smart, cover the full syllabus, do the papers and all, you can. MAF and FAR only means percentage marks. I didn't get it, right? I didn't get the point. Right. So taxable profit, are we okay? Are we okay here? Right? All correct, sir. Dhanushika, thank you. So then students, now you need to get the tax. So tax, which is 30% tax, 30% tax, and make sure student, even we don't care what about the tax. What we care is when the tax will be paid. In investment appraisal questions, what we really care is when the tax will be paid. So examiner can sometimes say this year tax will be paid in the next year. So first year tax is paid on the second year, so you should have 6th year as well. Sometimes examiner can tell you 50% of the current year tax will be paid in this year, the remaining 50% will be paid in the next year. If you are lucky, maybe you will get. I mean unlucky. So examiner can make the adjustment complex. So please make sure reading is very important and practice is also very important. So do a question or two like that. So let's say 50% this year. So here first year 50%, remaining 50% here. And when you are coming to second year, 50% from this, and the remaining 50% of this will be paid. So you have to do that and put the final amount here. So tax payment. But here simple. Examiner is telling 30% tax, so they are paying same year. Right. So 1450 this into 30%. 435 31274 into 30%, which is 9382. So 56,365 into 30%, 16,9,110. Are we okay? Right? Let me know. There are any differences, let me know. 8903. Then 11517. 11517. Are we okay? Perfect. Churafa, thank you. Dhanushika, thank you. So let me copy and paste now. So 435, then 9382. Okay. So actually, I did a revision session before last time also for AAT students, that is for process costing. So that is the highest viewed session in the YouTube. In Sinhala medium session, it is having around 10,000 views. English medium is having around 3,000, nearly 3,000 views. That's the highest viewed, webinar in the history of AAT when they started conducting. So if you really need process costing, maybe you can go and watch that video as well. Just a suggestion. I mean, if you are okay, no problem. Then, because my final objective is to get through, right? You should get through the exam. Okay. That's the AAT Institute's objective as well. The AAT Institute doesn't want you to fail. They want to pass, but they cannot just pass. Just give marks and pass. They make sure whoever the student coming out from AAT qualification having that knowledge. That's why they want to give the new knowledge and pass them, right? So after that, students, so tax is done. So what you call the final amount? But having investment appraisal and process costing will not guarantee you a pass, but you have to look at the other areas as well. What you call here? What's the name? What's the name now? When you got all these, what is the name? What's the name? What do you call? This one, Rokaya. Yes. So only, so they asked me to do this one. Yes. So net cash flow, right? Man is asking which class you are doing. So I will always say when you are selecting an AAT class, look at the AEC, right? Accredited institutes, education institutes. Okay. So look at from the AAT website, you have registered classes. Net cash flow. So net cash flow. So 71 here, net cash flow. Now these words are really important. You have to know the words, right? So it's really important. You cannot just put a word here. Yes. So let me know the answers. Others? So this is 71. Other, this one, and no. Let me know. Let me know. Right? No, it's there, Fatima, in English medium as well. Now make sure at the exam you have NPV, process costing, limited factor decision making, variance analysis, absorption costing, marginal costing, right? Decision trees, expected value, and cost of capital, variances, advanced variances. I mean, students, make sure you will go to the examination with the full syllabus knowledge, right? Full syllabus knowledge. Don't do the selective learning. Don't just go to the examination with only the knowledge from a certain area, right? Even sometimes examiner tested different things in investment appraisal. It's not all about this NPV. Once examiner tested asset replacement decision. In how frequently you have to, how frequently you have to replace the assets, once a year, twice a year, thrice a year, right? So maybe it can be two projects. From the two projects, which projects you are going to select? Maybe you are not having funds, but when you are not having funds, which projects you have to invest? Profitability index, right? And it can be sometimes not projects which are not generating revenue. So it could be only cost. So from the cost, how to take decision. So it's not all about this one, but this is a highly possible area. But there are possibilities that the examiner could test others. And other lessons, definitely you should have the knowledge, working capital management. Okay. So there are lessons. So make sure don't just go to the examination with only 1-2 lessons. So first year, yes, Danushika, thank you. 17,265. Second year, 17,265. 17,265. Second year. Right. Okay. So third, so I tried all the past papers, every question, but still failing. So which means maybe your theory knowledge, you have to refresh your theory knowledge. So 38,142. 38,142. 142. 38,142. Then the next one, 55,705. 55,705. And the fourth year, Consul, thank you. Yes. 37,024. 37,024. 37,024. Danushika, thank you. The final year, fifth year, Fatima, Aisha, 26,873, right? 26,873. 26,873, right? 26,873. Okay. 26 or 37,873. Can someone confirm? Two students send me different answers. Can someone confirm? 26,873 or 37,873? This is plus, right? 26,873, right? Consul. 27,873, Fatima. Okay. Sandara, right? Thank you. Okay. Now, then what you have to do? Next one. Now, student, this is year 0. This is year 0. So let's take an example. Let's say this is year 2024. 2025, don't think like that. It will be difficult to understand it. Just assume this is 24. So this is 25, 26, 27, 28, 29. Right? So all these cash flows are the cash flows you will be receiving in these respective years. Let's say your friend is telling, Machang, right? Okay, friend, Yalua, right? Okay. Can you give me 5,000 rupees? And I will make sure once I'm done with AAT and once I become a chartered accountant or a ACCA member, maybe like 3 to 5 years, let's say 5 years, right? 3 years is enough. Let's say after 5 years, I will give you that 5,000. After, so 26,873 is without. So what if we took the net cash flow? We have to add the residual value. Yes, these two also you have to add. Is it incorrect? So I just put your answers, right? So 5,000, 6,000, 108, 840, everything you have to put, everything. Then minus 54, 270, 54, 420, 9,500, 16,530, 11,517, 27, right? 27. 27. Yes, 37. Correct. Danushika send the correct answer first. 37, right? Yes. Yes. Thank you. So 37, right? Okay. Right. Then, right. So students, so your friend is telling, so I will be giving this 5,000 after 5 years. Now, can you tell me the 5,000 you will be receiving after 5 years? Value, the 5,000 you will be receiving after 5 years, the value of that 5,000 you will be receiving after 5 years, the current value would be lower than the 5,000 or higher than the 5,000. Can you tell me? Right? It is what? Yes, Fatima. Shfaq, yes. It is higher or lower? It is lower. Anushi, very good. It is lower. Why? Because in a country like Sri Lanka, we are having a proud history. So we are always having inflation, right? Not the other way around. So our currency depreciating. So because, which means if you have 5,000 today, let's say maybe you can eat 50 fish buns. I don't think anyone will eat 50 fish buns per day, right? But let's say when you have 5,000 in 5 years, maybe you will not be able to eat 50 fish buns. Maybe 25 fish buns. Why? The ability to buy products will go down. So which means what? There is a time value. Because of the time value, what you have to do? So you have to discount this. So this is the value you are getting in first year, but you have to see, okay, this value in first year, what is the real value in year 0? The value you are getting in fifth year, which is 37,873, you have to see, okay, what is the real value of this cash flow as of year 0? So it should be lower than that. So what you have to do? You have to discount, right? You have to discount. So write the discounting factor. So discounting factor is given as 15%. So what you have to do? You have to calculate the discounting factor. So how to calculate? 1 divided by 1 plus r to the power n. 1 divided 1 plus r to the power n. 1 plus r to the power n. Okay. Then, so which means if it is the first year, 1 divided by 1 plus 1.5 to the power 1. Power 1, power 2, power 3 likewise. Okay. So can you calculate and let me know answer? So year 0 it is first, year it is 1. So can you send me the 5 years answers? I will give you 30 seconds. No. Year 1, how much? Very good. Aisha, thank you. So 0.870, 0.870, 0.756, 0.756, then 0.658, 0.658, 658, 0.572, 0.572, 0.497, 0.497, 0.497. Then students, so this is the net cash flow. So this is the discounting factor. So then you get the present value. Next you get the present value. So once you get the net cash flow and that into the discounting factor, how to get the discounting factor? This is the, formula. So, these are very basic things, students. So anyway, can you make a pause? So how to get 1 divided, now even at the examination, you will have the formula book. So there also you can find out, but let me show you once. So these are basic things. Definitely you are learning this in management accounting, but anyway. So students, see 1 divided by 1.15, right? 1.515, then to the power, right? To the power 1. This is the first year also, to the power 1. So that equals, so you are getting the answer, which is 0.869, right? 0.869. So this is how you get. So if you want to get the second year, you go there and replace it. So you get the second year. Okay. Right. So so send me present values. So this one into 1, which is 71. And this one. So can you send me answers? Right? 15,003. Is it 15,003? Right? 15,003. 15,003. Then, okay. Second year. Second year. So this is first year, no? Second year. That is the energy. 28,835. 28,835. 28,835. Then the first year should be 1521. 1521 the make lamai. Yes. 1521. Right? So for third year, Dinuk, yes, thank you. Fatima, yes, Aisha, thank you. Renushi, yes, 36,654, right? 36,654. 36,654. Then year 4, 21,778. 21,778. 21,778. Then year 5, 21,178. Okay. 21,178. Now, right. Year 5, then in year 5, very good. 18,823. 18,823. Very good. The final answer, which is the total, what you call? This is the total, what you call That is the net present value. So your net present value is how much? Your net present value is how much? Your net present value is how much? Dhanba? Yes. Dhanushika, yes, very good. Others? Others? Yes. Sandana, very good. Others? Others? Seems girls are really accurate on calculation, no? Calculator? Speed, efficient. See. Yes, Fatima, yes. 49, 49, 511. It's a plus amount. So this is the answer. This is the answer for the first part. So compute the net present value of the modification of machine. So that's the answer for the first one. So you are having 13 marks. The second one is identify whether the company should modify the existing machine. So students, so make sure now here you are having a plus amount. So if you have a plus amount in a revenue generating project, not in every project, right? So it can be mutually exclusive projects. So there are different, but here normally you are getting revenue generating projects. So if a revenue generating project, if it's a plus amount, what would be your recommendation? You recommend it. You recommend. And if it is a minus, you are not recommend. You are not recommend. But here you have a plus amount of this much. This is 49 million. So when you are writing that, you have to write the full amount. So what would be your answer? Since the modification of the new machine generates a positive, this is important one, a positive NPV. So this is important one of 49,511,000. This or let's say this project is recommended. This project is recommended, right? So this project is recommended also important. So examiner will see whether you will have this, right? 511, what is that? Yes, 511. So a positive NPV is very important and the project is recommended. These two words are important. But anyway, better if you put the number as well. Okay, so students, so this is what AAT Institute asked me to do, right? And guide you on the NPV based on the question. So I selected the most recent paper and hope, right, you really understood this one. So my objective also to do something for our students, whoever, I mean our AAT students. So I'm also as a AAT member who was a student like you. So I know the value of that. So that's the reason. And so I hope you will be able to get through your examination. So this is not all about investment appraisal, as I told. So there are different lessons. So make sure these 10 days will be really important, right? So whatever you are doing in these 10 days will definitely change your result, right? And so I'm doing this as a satisfaction, as I told. I mean, I'm doing this for the benefit of the students only. So thank you very much, student, for participating. And if you can send a message whether you understood this one or whatever your feedback. So I hope you will get through AAT, and after AAT, don't stop with AAT. Do either CA or ACCA. Maybe we will meet someday, maybe at BMI, CH, or wherever. So hope definitely you will be able to become a very good professional within like 5 to 7 years. So I wish you all the very best to you, and please put your maximum commitment in these 10 days. So definitely you will be able to maybe not just pass this management accounting and finance subject, but to get an A pass. So thank you for joining, and good night, everyone.